Now let's take another question. These all questions are based upon the last segments. So there were 3 journal entries: cash account debit to capital account rupees 5,000, purchase account debit to cash account rupees 1,000, and journal entry number 3, cash account debit to sales account rupees 2,000. Closing stock as on 31st March 2013 rupees 200. So in these 3 journal entries, 4 accounts are involved, or 4 items are involved. Number 1, cash account. Number 2, capital account. And number 3, purchase account. And number 4, sales account. If you notice these journal entries, you will find cash account has been involved 3 times, but only one account will be opened, cash account. If cash account is involved 3 times, it doesn't mean that we will have to open 3 cash account, because only one account or one ledger in the same name can be opened. So draw the journal entries for ledger posting: T style, cash account, capital account, purchase account, and then sales account. Now we are going to start ledger posting. Ledger posting means to write down the amounts either on debit side or on credit side. So let's have a look at the first journal entry: cash account debit to capital account. First of all, cash account debit rupees 5,000. It means debit cash account in the ledger posting. Debit cash account in the ledger posting means write down this amount of rupees 5,000 on the debit side of cash account. So come to the cash account. In the amount column, rupees 5,000. In the date column, 1. Because date is not given, so we'll write down the transaction number, that is 1. And you know, on debit side, on left hand side, we always start the narration with 2, because the narration will be written on the particular column. So 2, what should we write down? You know, when cash account was debited by rupees 1,000, the opposite account was to capital account. So write down to capital account, rupees 5,000 on debit side. It means cash account has been debited by rupees 5,000 in ledger posting, or other words, you can say cash account has been posted by rupees 1,000 on debit side. Now the second is to capital account, rupees 5,000. What it means? Credit capital account by rupees 5,000. It means in the ledger posting, write down rupees 5,000 on the credit side of capital account. So let's move to the capital account. On credit side, please write down rupees 5,000, and the date will be 1, and the narration in the particulars column will be by. What will you write down? Yes, you will write down cash, because when capital account was credited in the journal entry, the opposite account was cash. So you will write down by cash account. Now come to the journal entry number 2, purchases account debit to cash account. Means purchases account debit rupees 1,000. It means debit purchases account by rupees 1,000, or you can say in ledger posting, write down rupees 1,000 on the debit side of purchases account. So let's move to the purchases account. On debit side, please write rupees 1,000, and in the date column 2, and in the narration 2 cash account, because when purchases account was debited by rupees 1,000, the opposite account in the journal entry was to cash. So you will have to write down to cash account. You know, on debit side, on left hand side in the ledger posting, you have to start the narration with 2, and on credit side, you have to write down the narration, or you have to start the narration with the word by. So purchases account has been debited by rupees 1,000, or you can say the purchases account has been posted by rupees 1,000 on debit side. Whatever you like the phrase. Now, to cash count rupees 1000. It means credit cash count by rupees 1000. It means write down rupees 1000 on the credit side of cash count. So come to the cash count, and on credit side write down 2 in the date column, and then write down by purchases, and in the amount column rupees 1000. Journal entry number 3, cash count debit to sales count. What it means? Debit cash count by rupees 2000. So move to the cash count. On debit side, in the amount column write down rupees 2000, and in the date column number 3, and in the narration I mean to say particular column 2. What will you write down? Because when cash count was debited, the opposite account was to sales. So write down to sales count. Now, to sales count rupees 2000. It means credit sales count rupees 2000. Move to the sales count and come on the credit side, write down 2000. And the date will be 3 and the particulars will be by. What will you write in the particulars column? Because when sales count was credited, the opposite account was cash count. So write down by cash count. In this way, on the basis of journal entry, we have completed ledger posting. Now, what will be the next step? We have to find out the closing balances of these 4 accounts. Closing balances means balance CD. This is the amount supplied by us to the weaker side. Okay, let's move to cash account. On debit side, the total is 7000, but on credit side, the total is only rupees 1000. So write down rupees 6000 on credit side. Now the total on both sides is rupees 7000. So what will be the narration? Date 31st March 2013 by balance CD, or you can write down by closing balance. But I will always use by balance CD or to balance CD. This is the balancing figure of rupees 6000. What is the meaning of balancing figure? Balancing figure means the figure or the amount you supply from your own side to make the totals equal on both sides. So we have supplied rupees 6000 to the credit side so that the total on both sides can be equal, and that total is rupees 7000. Now move to the capital account. On credit side, the total is 5000, but on debit side, the total is 0. So you supply rupees 5000 in the amount column, and the date will be 31st March 2013. Be careful. The closing balance is supplied always at the time of closing. Basically, we are closing the ledgers. So on debit side, I mean to say on left hand side, to balance CD rupees 5000, and the total on both sides rupees 5000. Be careful. Whenever we write down the total, you should use double horizontal line. Means this is the closing. Now move to the purchases account. On debit side, the total is 1000, but on credit side, it's nothing. So write down rupees 1000 so that the total on both sides is equal. And the date will be 31st March 2013 by balance CD rupees 1000. The total on both sides rupees 1000. Now move to the sales account. On credit side, it was by cash count 2000, so total 2000 on credit side, but on debit side, it's nothing. So you write down from your own side rupees 2000. This is to balance CD. On date is 31st March 2013. Now the total on both sides rupees 2000. So we have calculated the closing balances of all these 4 ledgers. Now let's move to the trial balance. You know, trial balance is the list of closing balances of different ledgers. opened during the year. This is the list of balancing figures or closing balances. So trial balance as on 31st March 2013 on left hand side. What will you write down? First of all, what is the closing balance of cash account? I mean to say by balance CD of cash account. That was 6,000 on credit side. It means cash is carrying debit balance. If cash is carrying debit balance, it means the debit side of cash account is stronger than credit. So come on the debit side and write down cash, rupees 6,000. Then come to the capital account. To balance CD, rupees 5,000. It means capital is carrying credit balance. So this balance CD will be transferred to the right hand side of trial balance. Capital account, rupees 5,000. This is the closing balance of capital account. Now move to the purchases account. By balance CD means on credit side rupees 1,000. So it will go to the debit balance of trial balance. So write down purchase account rupees 1,000. Now sales account. To balance CD. You know this to balance CD or closing balance will move to trial balance. So come on the credit side of trial balance, write down sales rupees 2,000. So what's the total on both sides? Rupees 7,000. It means our journal entries, our ledger posting, all the totals, everything was perfectly all right because the both sides the totals are equal. Means our trial balance is balanced. And the closing stock as on 31st March 2013 rupees 200. This thing should be written at the footnotes of trial balance if there is any closing stock. So in this way, first we made journal entries. On the basis of journal entry, ledger posting was done, and on the basis of closing balances of ledgers, trial balance was prepared, and on the basis of trial balance, final accounts are prepared. I will teach you final accounts after some episodes.